So yesterday, the MPC decided to keep rates unchanged, the cash reserve position unchanged, but made a decision on the Naira. What impact has that had on the markets?
Now, as it is, thank you, Lerato. In terms of the decisions reached by the MPC yesterday, it was not exactly a surprise for most people when it comes to the MPR. Firstly, the MPR remained unchanged at 12%, that it was. The CRR, that's the cash reserve ratio, was equally maintained at 8%. And then, incidentally, the Naira was devalued from about 150 Naira it used to be to about 155 Naira, which means it can even float up to 160 Naira per dollar. Now, if the way the market reacts is what we want to know, then I will tell you that it was not a surprise, because he has hinted 2 weeks back that the Naira will be devalued. So basically, the market have adjusted towards it, and all this have been taken into cognizance as it is today. So the market did not exactly react. Now, where they would have changed basically was that there was an expectation that the MPR will be increased marginally. But incidentally, people were surprised that it remained the same.
All right, so you were expecting him to raise it by, at the very least, 25, some even said 50 basis points. How would that help the situation?
Sorry, I didn't get the question.
If he had increased by 25 basis points or even 50, what impact would that have?
Now, the impact it will have had was basically that lending rates will have gone up. Now, with an increase in lending rates, it's going to have like a multiplier effect. First, the companies that are highly geared will have to pay more as interest and finance charges. The direct implication is that the cost of production will go up, and the companies most likely are going to pass it on to the consumers. It will now form to a cyclical situation where we're going to have a continuous increase in inflation.
Right.
When the prices are passed on to the consumers, it means they're going to pay more for the services they're going to enjoy, and that means there will be an inflation that will be going on.
Now, many experts are saying by devaluing the Naira, it means less pressure for the CBN to act on the interest rate front. Why is that?
Now, it's less pressure for them because at the end of the day, it's going to equate, balance out. As it stands out, if they are using the foreign reserves to fight the devaluation of the Naira, as it is, the foreign reserve is continuously being depleted week on week. So basically what they've done is that they've devalued it in such a way that it will be more like a free market situation. It's going to be based on the forces of demand and supply. And with that, we think it's going to equate and then balance out fully.
I mean, obviously, Nigeria is an import-dependent economy, and so you do need to have a free-floating currency, but you also do need to have stability of a currency so that companies can plan for their inputs and the costs that they have to incur. Inflation is an issue. He said we shouldn't exaggerate it, but we did see inflation coming to 10.5% in October. What are your expectations for inflation, and how will a devalued Naira help that situation?
Now, as it stands today, the inflation we still expect is going to increase marginally between now and the end of the year. That nobody can do anything about it. Because as it stands, the inflation will be relatively stable, though he is telling us basically not to over-exaggerate it. But it's something we are living with. Within September and October, there was a slight increase in inflation, which we're all aware of. And as it stands, it's going to increase marginally between now and December. Now, looking at it, Nigeria being an import-dependent country, it's basically a question of adjusting a little bit. If there could be changes in policy that will encourage production locally and then export, this will definitely affect the exchange rates. But unfortunately, we seem to be importing more than we export.